Good morning. Welcome to Stock Market Today. It's Tuesday, August 11th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where we get a lot of the content for this show. Also gives you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So as we dive in on a Tuesday morning, first a recap of yesterday where U.S. equities finished mostly higher with value names outperforming growth on the day. Energy, industrials, and materials led to the upside. Tech and comm services lagged as the Qs closed lower on the day. Treasuries were weaker at the long end of the curve. The dollar was stronger versus the euro, but little changed against the yen. Gold closed up 60 basis points, and WTI crude settled up 1.7% on Monday. As we get to the desk this morning, futures are following through to the upside for the S&P, up 70 basis points as the path of least resistance for stocks remains higher. Asian markets were mostly higher overnight with Hong Kong, Japan, and South Korea leading. China underperformed, falling by more than 1%. European markets are seeing big gains on the day. Treasuries were weaker across the curve. The dollar is stronger on the yen, but weaker on the euro cross. Gold is down 2%, and WTI crude is adding on, up 1.6% to kick us off on a Tuesday morning. That starts with the February highs still in sight for the S&P 500. You can see the index here. Steady uptrend off of the March 23rd lows above the 50 and 200-day moving averages. So if we start to think about where is support, which we raised this week, still in the 3150 to 3250 area, 3000 below that, round numbers, psychologically important. Resistance, we're in the resistance zone, if you will, between 3350 and 3400, but the Feb highs are firmly in sight. Now, in the near term, we are overbought using the 13-period CCI as a proxy for near-term overbought, oversold. So we're overbought within the context of an uptrend. Chaikin money flow is strongly bullish, and yesterday's move higher took that money flow indicator to the levels that we saw back in the January-February timeframe. Above that, actually above the levels that we saw at the highs. So that's the kind of the framework for the overall equity market here as we dive into trading on Tuesday morning, very much following the script that we've been laying out. As we've been saying, above support, you have to play for the highs, and that's likely to continue to be the case here in the near term. As I said, the path of least resistance is to the upside. Let's dive into our market in a minute now. What are we writing about today? Well, value leads as stocks close mostly higher on the day. It's Tuesday, so we're doing our sector rotation work, drilling down on the individual sectors of the index and seeing where is the strength, where is the weakness, and how it might be shifting. Industrials are showing signs of life on a relative basis as transports begin to outperform. Healthcare comes under renewed relative pressure, and that's a bit of a disappointment. And as I said, futures do point to a higher open here today. Now, if we dig in on the major indices from a power bar perspective, remember the power bar tells us how many stocks in each index or ETF, if you will, have bullish ratings. In green, how many have neutral ratings and how many have bearish ratings. So we can see the Dow added 1.3% yesterday, 10-3 bulls to bears there. S&P 500 up 29 basis points, 165 to 58 on the ratio. NASDAQ was a decliner on the day, 37-4 bulls to bears. So still a solidly bullish power bar ratio there. Small caps up 1% to outperform, 721 to 228 bulls to bears, as that group has just continued to improve. There's no two ways about it. Bonds down tick, sending yields higher. Energy was your leader on the day, up over 3%. And we can see the power bar ratio has now shifted to even for the energy complex. If we look at the XLE, there are 6 bullish stocks and 6 bearish stocks within that ETF. So according to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets across the board are mixed. Let's dive into our stock of the day now. We're going to talk a lot about the industrials a little bit later on in the show. Remember a few weeks ago, we started highlighting materials as showing signs of improvement. Now we're seeing the same in the industrials. So we highlight a name like Cummins, CMI, the ticker here, up 5.5% yesterday. Bullish rating, strong trend, strong industry group as it trades above a rising long-term trend line. Stock is leading the market as it has been doing since late April. It is oversold. Our indicator is oversold, which is compelling as the stock breaks out of this range and near-term consolidation, while Chaikin money flow is bullish. Would also note that the stock triggered one of our signals today, our momentum breakout signal. So CMI looks like a compelling name here. I think as long as we're holding above this kind of 195 to 200 area, CMI is an interesting name as a bullish setup here for investors who are looking to take advantage of some improving relative strength within the industrial complex, something we're going to look at just a little bit later on in this show. So take a look at CMI as a potentially bullish idea for the portfolio today. Turning now to the sector tracker, the movement of the major sectors over the last 5 days. And there's your industrials at the top of the list. They've had a nice little punch of late at the top of the leaderboard over the past 5 days of trading. Energy also there, actually seeing signs of potential relative basing in the energy space, which intuitively makes sense in light of this view of rising inflation that we have. Now, we've called it out in areas like the precious metals. We've called it out in areas like the materials broadly. But energy now, something that makes sense to start kind of paying attention to, as downside momentum looks to be diminishing. Discretionary materials round out the top 4 groups over the past week of trading. Financials, comms, and utilities are middle of the road. REITs, staples, and tech are all higher over the past 5 days, but underperforming. And healthcare is the only group that is down over the past week of trading. And we'll take a look at healthcare on a relative basis a little bit later on, as we do have a relative breakdown there. Our industry in focus today, insurance services, which over the past 6 months has lagged the S&P 500, underperforming by a little over 19%. However, it does have a bullish power bar ratio. 33-3 bulls to bears there, earns it a rank of number 2 of the 21 subsectors we look at, and it has moved up 1 slot over the past week of trading. So some of the names there that might be interesting on the long side of the portfolio. And I do think you have to do work here. I'll tell you why. FAF, at First American Financial, very bullish. Principal Financial Group, PFG, very bullish. And Assurant, AIZ, a very bullish Chaikin Power Gauge rating within the context of a fund that's a mixed bag at best. Neutral rating, but a strong trend above the trend line. Money flow dipping into bullish territory here as the overbought, oversold indicator is moving higher from an oversold condition. The real kind of hang up that I have here is in relative strength, as the group has been a laggard since last October, continues to be a laggard. Now, the case can be made that the relative underperformance has slightly diminished of late, but it is still an underperformer. So I think selection becomes really important there. Drilling down on the individual names, if you are looking for ideas. Again, we showed you 3 that could warrant some attention. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers within the main market index. MGM up 13.7% as IAC, that's Barry Diller's company, made $1 billion investment, and that stokes a rally in MGM. Royal Caribbean, RCL, some of their commentary about trends in 2021 got investors excited. That stock rallied by 10%. Wynn, some news as it relates to visas in Macau, taken as a positive here by investors. Wynn, WYNN, up nearly 10% on the day. UAL, it's kind of the reopening trades. Had a nice day yesterday. There's no 2 ways about it. United Airlines, nothing company specific to drive trading there, up 9.3%. FedEx, FDX, a very bullish stock, nice breakout there, up nearly 9% to trade to a 52-week high. As I said yesterday, it did catch an upgrade from SC Bernstein that likely helped propel the stock higher. On the loser side of the board, not a lot of company specific. I think it has more to do with money coming out of some of the high-performing names. Tyler Tech, TYL, down 5.75%, bearish rating there. Market Access, MKTX, down 5% with a neutral rating. Dexcom, been a strong stock of late. seeing a little profit taking down 4.4%. I do note, number one, that I do own that stock, and it was down over 6% at one point in the day yesterday. Fiserv down about 4.5%, and Hologic, HOLX, down a little less than 4% for that very bullish stock. So the rotation theme is one that continues to play out here in the near term. And, we've been on the other side of it, and it is continuing to play out in the near term. So in all fairness, we're on the wrong side of it here in the near term. Now, for us, we're going to pay attention, and if the trends shift in a meaningful way, and we have reason to believe that they're likely to persist, we will change our views, right? So you can see here the 4-week relative rotation graph for the S&P 500 sectors. And this is a great tool to get a quick glimpse of how sectors are rotating. You can choose your time frame. I'm using a weekly with a tail size of 4 weeks to get a sense of the 1-month trend of rotation at the sector level. So you can see you have the 4 quadrants: leading, weakening, lagging, and improving. And what you'll see is the leading area. We have materials, which we've talked about a lot. You also have discretionary, although it is moving lower. Now, your big leadership from a trend perspective is where we're seeing some money come out of late. That's your comm services and your technology. Now, your laggards, right? Healthcare, we said it's breaking down. REITs and utilities lagging. Those are your defensive groups. So if you're bullish on the market, you like to see the REITs and utilities as well as the staples lagging, right? Those 3 areas of the market are where investors tend to turn in times of uncertainty. But where the rotation is playing out and getting a lot of tension is in that improving quadrant in the upper left-hand corner there, where you can see financials, energy, and now industrials, which we are going to talk about in just a moment. So remember, this is a little shorter term in nature. It's 4 weeks. You have to put it within the context of the bigger picture trends that we highlight in our note, and that if you look at kind of relative charts, which we're going to look at in just a moment, right? So you kind of put that near-term rotation within the context of bigger picture trends, and it wakes you up, right? We're waking up to the fact that industrials are improving, and I'll show you why in just a little bit. Now, less of a concern here at tech, and I go through it in my note, but take a look at the industrials here. Here's XLI relative to the SPY, so industrials relative to the S&P 500. Big breakdown, right? And gone into this consolidation. Now we've rallied back into the resistance zone, while the RSI of the ratio has put in a series of higher lows as it tries to shift to bullish ranges. Notice that after it became overbought here on this pullback, it did not become oversold and is now shifting higher. So that's interesting. Now put that within the context again of the bigger picture trend as the ratio trades below the 200-day moving average. So to me, you start to look for names that look compelling, names like Cummins, names like FedEx. Drill down on some of the names that are within a leading industry group within this sector. Take a look at transports, IYT at the bottom of the chart relative to the SPY. Look at that nice breakout from the consolidation. So if I'm looking to take advantage, right, similar to what we did with materials, if you were looking to take advantage, you saw strength in the precious metals names. Well, now you're starting to see it in the transports names within the industrials. So take a look. Drill down on IYT and its holdings. I highlight IYT in my note today. Take a look at it here at the bottom of this chart as it begins to move topside on a relative basis. And then finally, we'll wrap things up with healthcare as it breaks down again. Remember, we talked about healthcare and we saw this consolidation and we said, watch out for some weakness. That weakness played out, but it found support, right, and tried to bounce. And that was an encouraging sign. However, we've now broken back below that support, back below the 200-day moving average for the ratio, all while the RSI of this ratio shifts towards bearish ranges. Now, on an absolute basis, healthcare is still holding up near the highs, but now you have to watch out for a potential breakdown as the relative weakness starts to play through. So this is a bit of a disappointment here. So this is the rotation that's playing out. That's going to wrap us for today. If you want more information, dig into my note, shakenanalytics.com/test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.